Welcome to the Greenhouse Podcast, the podcast dedicated to bringing you real, honest business insights from people who are doing it too. I'm Jackie, and every week I'll be sharing the best bits from our Greenhouse speakers, as well as talking to people just like you, small business owners, founders, entrepreneurs, side hustlers, freelancers, who are all going to be sharing their ideas to help your business bloom. I'm really excited that in this episode, we're going to hear from Greg Layzell of Layzell & Co. Greg was one of our speakers at Greenhouse 2021, and I really strategically put Greg on stage first, because if we're not thinking about the finances in our business, then we're really doing something wrong. Greenhouse 2021 was Jersey's first small business conference, and I'm so excited to share that we're back for 2022 on the 14th and 15th of October. So if you're interested in joining us, head to greenhouse.je to get your ticket now. So let's hear from Greg.
Revenue is vanity, profit is sanity, but cash is king. It's my favorite quote in business. Earlier in the year, I was speaking to a client who is a very successful guy. He spent all of last year building the building blocks of his business, and it launched this year. And he was telling me about his projected earnings for year 2. And they're huge. And I was congratulating him and saying how great that was, and well done, and da-da-da. And he just turns to me and he says, really, really humble, just said, Greg, revenue is vanity, you know that. And that's kind of stuck with me, because it is. It's important, of course, but it's only part of the story. Revenue is what everyone gets excited about on social media when they're telling you about 100 grand a month. That's great, but if it's cost you 110 grand to make it, it's not a sustainable business. So where you want to look then is profit. And there's 2 types of profit, which I'll go into, but that's the bottom line of the business. That's your ultimate performance. Profit and cash are not the same. And without getting into nerdy accountant speak, there's transactions you'll make that affect cash that don't affect profit. So you can have what looks on paper a hugely profitable business that has cash flow issues, and that's why cash will always be king. And when I'm talking about cash, I don't mean like cash notes, I mean cash in the bank. So you want to look at your business from 3 angles. You want to look at it strategically. What do we want for my business? What's the future goal? Then you want to go a little bit deeper and say, so what tactically, what are we going to implement to reach that strategic goal? And then finally, operationally, what are we going to do day to day to achieve those tactics to then achieve the strategy? But to be able to plan strategically and then set the tactics, you need to know what resources you have available to you. Resources all cost money. So the ultimate resource that you need, unless you have a team of volunteers, is cash. You need to know what cash you're going to have and when you're going to have it. So referring back to my sole trader story where he got his whacking great tax bill that he wasn't expecting, he should have been expecting it. He should have known that was going to come. That was going to be racking up. And if he had known, he could have planned for it and he could have done something about it. If your business is seasonal, if you sell Christmas trees, you know November and December are going to be chaos and your revenues are massive. And then you're going to have 0 for 9 months. Well, I presume you'd have 0 for 9 months of the year, 10 months of the year. So you want to factor that in and do something with that knowledge that you have of what's going to be coming around the corner. Some of the things that will impact cash that won't affect profit. A loan, if you receive a loan, you've had a huge cash inflow, that's going to be well away from profit. And then paying back that loan, that's over the next couple of years or 5 years, that's going to be winding down your cash, and again, not affect profit. If you're GST registered, you might think, oh, all this income is great, but you've got this pretend 5% on the top that's not yours. It was never yours. You need to pay that over. So again, that's not going to appear on your impact your profit at all. So there's a few accountancy terms, some of which you'll be familiar with, that are worth knowing and are worth keeping an eye on. So revenue, I've mentioned, that's all income, with the exception of like government grants. That's all earned income. Gross profit. Gross profit is what it's cost, what you've made on your product or service directly. So if you sell widgets for £20 and it costs you £10 to buy, your gross profit is £10. But it doesn't, like, business doesn't stop there. There's more to it. You need to have a premise, and you need to have insurance, and you need to pay staff. Once you've factored in all of those additional costs, you have your net profit, and that's what's called your bottom line, and that's your important bit. If you're a company in Jersey, I've got and tax, there is going to probably be no tax. Then the final two are things that you really want to be on top of, especially when it comes to cash flow. Your debtors, that is who owes you money. And your creditors is, you guessed it, who do you owe money to. So I want to go into these a little bit more, because those two, debtors and creditors, have the core impact on your cash flows. Your debtors. If people aren't paying you, you're going to be recording good profits, but horrific cash flows. You want to make sure that people do pay you. If you want to reduce the amount of time it takes them to pay you. So if you need that money as soon as you finish that job, don't give them 30 days on your invoice to pay, because they will wait 30 days and then they might be late. If you're a graphic designer and you've just done a month's project and you've raised your invoice at the end of the month and you've given them 30 days, so you're now 2 months potentially with not getting paid, but then they pay late. So you could be 3 months, and in that time you might have had to have paid a subcontractor who helped you with something for that project, and you could be out of pocket, and you want to avoid that. So if you need it to be within 7 days, make it 7 days. No one's going to judge or care. Just make it what you need it to be. And then on the flip side of that, your creditors, who you owe. Similar analogy, if you're a carpenter and you've had to buy materials for a job, and your Norman's bill comes in and they've given you 30 days because they're a big firm and they don't need it urgently, don't rush to pay that as soon as you see it. They've given you 30 days. Pay it on day 29. Wait for your client to have paid you to pay it on. Otherwise, you end up in this backwards scenario where money's going the wrong way at the wrong time. If they've given you 30 days, you can presume that they're happy to get it within 30 days. So make the most of that, but then also be honest with yourself about what you expect from your clients when they come to pay you. Now, obviously, most of this, if you have a retail business, someone comes in, picks up whatever it is, walks out the door, and they pay you. So you don't have to worry about debtors in that instance. But if you're service-based specifically, then it's crucial, and you want to be on top of it. So reducing debt days, we talked about that. So things you could do is you can put on your invoice, like failure to pay within time frame, 4% interest. You might not actually apply that 4% interest, but it tells them that you're serious, you're not messing around. I'm going to come for you, and I'm going to charge you for this. And you might not actually do it, but hopefully people will take it seriously. You could go the other way and say if you pay within 3 days, you get 2% discount or something, but I perhaps wouldn't suggest that, because that would be a bit of a logistical nightmare. So if someone doesn't pay you on time, and it will impact your business. I had a client say to me yesterday, this person has not paid and it's causing me a problem, I need a loan. He doesn't need a loan. He doesn't want a loan because of this. The amount that he's owed is a large amount to him, and it's materially affecting his business. Write to them, tell them you've got 7 days, or I'm going to go to XYZ debt collector and they're going to take you to court. Don't mess around with it. If it's really, you've got to look after number one to a degree. So keep on top of people with these types of things. Responsible borrowing. So this is the loans bit. Don't all rush out and get loans. However, if you have an idea, or you know that to break through to that next level and you've planned everything, we just need an extra windfall of cash, go and get a loan. Like, business loans exist. Like a local example, do you think Dandara build their developments with cash in the bank? Of course they don't. They go and finance it. It's called leverage. It's part of business and not anything to worry about if you do it sensibly and properly. And when I say sensibly and properly, if you've done financial forecasting and you've been budgeting to then meet those financial forecasts, if you know loosely, because no one's got a crystal ball, if you know loosely what your next 12 months are going to look like, both from a profit point of view and from cash flow point of view, you could go and borrow fairly comfortable that you're going to be able to pay that back. So in your workbooks, this is really exciting, you're going to love it. It's a really basic, high-level cash flow forecast. So, like I say, no one's got a crystal ball. But if you follow this logic, you can kind of plan where you might be, and then you can use that information to make decisions on your business. So I'll talk you through it at kind of a high level. So month one, opening cash. We go on our banking app and we find out how much is in the bank, and we whack that number in there. Then we're going to say, well, how much money is going to come in, cash money for the next month. Now, this isn't invoices raised, it might be the invoices that you raised last month. If you've got a shop and it's like retail-based, you could look at what you did in the previous month or the same month last year. And then any other income, if you know a loan's coming in, bosh that all in there, and you've got your total cash in for that period. Then you go again, there's some examples there on what you're going to spend. If you've got staff costs, do you have fuel, do you need materials? Total cash out. We can net those off for the net movement in the period. Opening cash less the net movement, or add the net movement, gives you closing cash. Here's the exciting bit. We then take that figure and we whack that into month two, and we repeat the process. Now, the further out you go, the less accurate it's going to be. But it can give you an idea if you've got big ideas for growth in your company, your business. You can use this to say, right, well, at this time, we could have about this much, and this is what we could do with it. Then when month one actually happens, you can put the actual figures in there, and then that will change everything, the knock-on effect. So something to consider, it's not that difficult, is the point I want to make with having this for you.
What a great clip of Greg. That's my favourite little snippet of his from Greenhouse 2021. But before I jump into talking about Greg's clip, let's just talk a little bit about Real Creative. The Greenhouse podcast is sponsored by Real, and they're here to help brands stand out with video-first content. We're so excited to be recording our podcast here in the Real studio, and they're going to be supporting all of our video and audio content for Greenhouse 2022. So if you need video-first, scroll-stopping content, then please go and check them out at keepitreal.co.uk. So Greg, right, he talked a little bit in his speech about how cash is king. Cash is the most important thing in our business. But I know, and I'm sure you know too, that talking about cash can feel really hard. It can feel a little bit icky. But if we can't get over that feeling, then we're never going to be successful in our small business. It's really, really important that we get a handle on the numbers in our business if we want to thrive. And one of the really key takeaways from Greg's talks for me is that idea of your cash flow. It's so easy to get caught up in the social media hype about 100K months and 10K months, but everyone on social media is just talking about their revenue. They're not talking about the money they're taking home. They're not talking about money they're paying their mortgage with. They're talking about the money that's coming into the business. And as Greg said, if you're getting 100K coming into your business, but then you're spending 110K to make that business happen, then you're not making any money. In actual fact, you're in a deficit. And it's so easy to get caught up in that hype. And let's be real, right? Everybody, if they're running a business at one point or another, is going to have money problems. Sometimes the cash flow doesn't work. Sometimes people don't pay you on time. Sometimes you have loads of clients or loads of customers buying your stuff, and then you'll have a month where nobody turns up, nothing happens. And nobody you speak to in the small business community tells you that business isn't booming when you ask. I'm sure you've all been there. You'll say, oh, how's business? Oh, it's amazing. It's amazing. Yeah, we're really busy. What about you? Nobody ever says it's a shit show and it's really difficult and somebody's not paid their invoicing. So I think it's really important, and kind of the main thing I'd like you to take away from Greg's clip here is that there are lots of people out there that can help you. There are lots of professionals that you can lean on. There's a community of other small businesses around you that you can lean on and ask for support. You do not have to do things like this alone. And if you are worried about money, please do go and speak to a professional. I know that when I've spoken to my accountant, when I've had a dodgy month or an invoice hasn't come in on time, that they've been so helpful at being able to say, oh yeah, just think about this, do this. And suddenly it's not such a big worry anymore. So I hope that you found this episode useful. Thank you so much for tuning in. I'll be back next week wherever you get your podcasts and on YouTube for our next free episode. But before I go, I'd really love for you to be a part of our community. You can find us at Greenhouse Jersey on Instagram. Just come along there, see what we're all about and get involved. And don't forget to leave us a review if you enjoyed this episode, because they really do help. Thanks so much for tuning in.